Rolf
It
is
works.
here from Norway. Yeah. Hi, Simon. Welcome.
Hey,
You can
thank
say
you.
hi to the community.
Hello, everybody. I probably know a couple of you already. Stockholm ecosystem isn't that big, right? Usual
Yes,
suspects.
compared to Silicon Valley, compared to London, maybe, but yeah, independently. Okay, Simon, if we start from very early, tell us a little bit about yourself to the community. However you want to start with education or experience directly or some story,
All
because
right.
we like to know a little bit more about you before we jump into the entire discussion of innovation
Sure.
ecosystems.
Sure. So to start somewhere, I rather than just jumping into the backstory, what I believe in is probably more important than where I come from, and it's sort of synonym to what makes me tick, and that's trying to do new stuff and just see how far I can take stuff. Really, it's that's at the core of what I do, and it materializes itself in very different ways, both in terms of entrepreneurship endeavors. In the past, it's been directed towards music, which not that many people know. Now it's not really that much music anymore. It's just a collection of guitars, but regardless, it's fun. I do things I like. I do things that are fun. And then to the backstory, I'm actually from an entrepreneurial family myself that has roots in the manufacturing industry. So as you might think and might assume, when you grow up in a family with entrepreneurs, it's more or less a requirement to become one. You get motivated to do so, right? I started working quite early for my father in his factory to just get a sense for what working is all about, and I kind of quickly realized that it sucked sweeping floors. Right? That's where you start. You start at the very bottom, and then you try to work yourself up. And that worked for perhaps 2-3 weeks, and then I realized that, hey, I could probably do something better with my time and still make money. And then it sort of spiraled from there. But I always tried to do sort of the borderline between making money and then doing community stuff. So very early, we managed to hustle the European. Like the European fund or whatever, where he gives away money to the municipals around Sweden, and actually got like $5,000 to buy trampolines. So that's sort of where my actual entrepreneurial journey started outside the family. But yeah, I've done a lot of weird stuff. Formally, I'm educated as an energy engineer, which is not close to anything that I work with today, but it was a way to start. My first company was out of an accelerator in Boston, where I worked with a concept of like smart algorithms for or actually algorithms for smart grids. So how you can optimize for yield in a microgrid, and got fairly fortunate and was able to push that off at least the IP or partially IP. So got some money, and then from there I've invested quite a lot of my money into startups and worked with startups, and hung around quite a lot of the accelerator programs, first and foremost in Boston, but then in Bay Area. And because while doing my own investments, I figured that I should do something else, like proper work with my life, right? So worked for from a consultancy basis with major IT companies and basically major corporations that has a Nordic anchor, but in the Bay Area region. So have worked with portfolio balances, trying to help entrepreneurs to figure out what to do and when to do it, and make sure they don't drown in ideas, because that's basically the biggest hurdle to overcome. And so a couple of years back, a mutual friend of ours from Founder Institute, Adi Aresi, was in contact with him because I've been a mentor and venture partner for them forever, and was looking to get into a more structured way of investing. I made something like, as right now, 30 plus angel investments, and then some more with like sweat equity and smaller tickets. But figured that I should do larger tickets to get more of an influence in the companies that I invest into. So I called Audio and asked if I could join his venture team, but then he ended up joining mine. so it's from there we basically, I was a part of their trying out a new concept called VC Lab a while back ago. Now it's actually quite big, which is cool. But did well throughout the program, raised some money, started doing investments, and now that's grown into XY Ventures, which is a combination of SPVs, I'd say, and then some money that we've spread out on a couple of deals. Had an idea about closing a larger fund, but at the same time got in contact with a local here in Sweden called Dan McCormick, who had a little bit of the same idea, coming from a Spotify background. So that's sort of materialized itself by me saying I spent a lot of money, hundreds of thousands of dollars on legal costs. So let's not do that again. We could probably, figure out a good way forward together if we try. So started doing greens as well. So right now I've basically been a part. That's primarily Dan's initiative. I'll be clear with that. Dan is awesome. So me and Dan, we're doing greens, which basically invest in unicorn alumni, and trying to support my best with current portfolio companies. And then I run XY Ventures, which primarily invests in deep tech, and three variations of deep tech. One is analytics, so basically ML and AI applications. Then the second component would be data management and DevOps. And the third component is data collection. And it's a little bit of a gray zone, but it's more geared towards Web3. So just building on your Discord question, use Discord if you like Web3, and if you like gaming, don't do it for purposes of facilitating a community. It's hard.
Got it. Good advice on Discord. So I'm not a big user of Discord, but got advice that maybe if you're trying to create something which eventually goes very big and you want it to be distributed and all, maybe Discord is the way to go. But I'll take your advice, Simon.
It's easy to access, right? It's super easy to access. You can see it everywhere. It's basically all the Web3 projects are doing it, so you can just join any random Discord. But in the end, it's about keeping the engagement up. And I think that it's, if there's some friction to joining a channel, then people there, they really want to be there instead of just joining for see what's going on. So Slack works well as well.
Yeah, Slack I've seen. I actually am part of several communities. One of these being Norhen Slack, and usually, I don't know, I've seen Slack to be very good for if you are a core connected team and working very well. So I don't know if a community has people from very disengaged to medium and lukewarm to highly engaged. So I think that is the challenge if you're trying to build an open community, like if we develop a startup and tech community with Startup Grind and Founder Institute, all that coming in Sweden. So I don't know. So we can probably have a quick chat there. But Simon, what a humble way of expressing what you have been developing, been a part of. So I've put some points here. Your initial sentence caught my attention. You were saying, trying to do new stuff. And I think that's core of the spirit of building something. Entrepreneurs, they are creators of solutions. So trying is very important. That's for the community, like try something. You won't get those opportunities when you can get them as an entrepreneur, but it's really out there when you are up against the forces of nature and market that you can actually try and see if your new stuff can get to work. You also mentioned music. That's also my interest. I keep reminding myself with this singing apparatus on the background. So my next album is coming most likely after summer. And nice. Startup Grind, already I released an English song on Spotify. You can check it. It's called Party Tonight. But that's where you talked about your family side. We had an entrepreneur here, Jane Wallerud. She very recently on Startup Grind community. So I think having that background, at times it kind of pushes forward, but at times it kind of pulls you into a conformity and a kind of a fixed way of working, and then you need to break out of it sometimes, and the money making and the community stuff. And very exciting part about VC Lab, I was part of their cohort 2, excellent program. So anybody out here in the audience who would like to start a venture fund, it's a great place to be. I was part of their cohort 2, couldn't do that due to a lot of things going on, but now they've called me back for cohort 7, so maybe I end up creating a VC. Jens, maybe we can talk about that. You're in the chat. But
Well,
Simon,
if you want any help with that, I'm happy to support. I've spoken there as well and know audio quite well. So I try to help people to push forward. It's basically, that's the core component, right? It's that I can't do. I know a couple of things, and I know how to do them quite well. But in the end, it's really about finding complements and other people that can really push forward and build something unique. And so, part of what I'm doing now is I work quite well with a couple of portfolio companies, and what it really comes down to is making sure that I can help the projects in a way that actually makes sense and not just do dumb work or spend money or be dumb money in a sense. So try to find good people and work with them, and that's why I work with Dan. That's why I work with Andreas, who's one of the founders, and that's why I try to help people in general.
No, I think that's great, and it also might be requiring a lot of energy from you. You have been part of, you said, more than 30 companies. So how, when you are working with these companies, is XY Ventures your primary vehicle of working? You have other ways of working? If you could talk to that.
Yeah, no, most of my investments are gathered in XY Ventures, and XY Ventures is a lot of subcomponents in terms of single purpose vehicles or special purpose vehicles and other kinds of investments. So it's more or less a pass-through company. So I don't do anything at that company, right? It's just a management company. But yeah, that's basically how I set it up, and then have equivalent companies in the States to make sure to adhere to, depending on what kind of projects there are. Different jurisdictions makes more sense. So have a US-based company as well.
Okay, but why the name XY? Is there some special reason, or is it just like that?
Oh, this is actually a fun story, because you would assume that XY is it's a male thing, right? I've heard that many times. It's not. It's very unsophisticated. It started as a placeholder because I didn't really audio. He said, you need to have a name for your fund because that's a part of the the generic program. And I was like, XYZ. And then a little while later, he said something along the lines like "drop the said," and I was like, well, XY, why not? And then it became XY Ventures, and then the backstory became, since I'm interested in technology, X and Y is the the beginning to all polynomial distributions. So I mean, that sort of made sense to me. So it doesn't mean anything at all. It's a placeholder name with two variables, basically.
But still, it catches attention short, and I think it's very different from the general names of funds that one sees around. So that's interesting, and many of the names. So that's also very important. Jonathan Gretchen was here like 2 months ago or 3 months ago, and he was telling a backstory of Founder Institute and why the word institute, and he was saying, well, maybe it sounds very institute, so I don't know, we just put it there. And most of these name decisions, or most of the entrepreneurship decisions, they're happening on a moving train, and which means that just go with the flow and take a decision. So great points over there. If we go into XY Ventures, are you guys kind of investing actively right now? What's the status? What exactly, you said deep tech, but if we can go a little bit more specific into what is it that you look for, and what kind of founder you are looking for, or what kind of indicators. So maybe we can dive a little bit over there.
Sure. So where I source most of my deals from XY is from the network that has come as a result of working with a lot of the accelerators. So when you work as a mentor or advisor or venture partner for these accelerators, then usually you get quite a lot of interesting companies on your table before they even consider actually raising money. And it's a good way to, you know, get in contact with them, work with them for a while, see if we like each other and if there's added value from you being there. And if so, then usually that leads to a ticket. And a ticket is as of right now, it's usually me, and then I pull together some other investors that I have in my network to do an SPV. Previously, you know, I'm still closing the remaining part of the XY fund, which is like $10 million, $15 million more, and got that more or less committed. But the thing is that I don't want to take out any fees. I don't want to do anything weird unless I'm really 100% sure that I get all the money in and I do good stuff. So that's basically what drives me to do SPVs as of right now, to just, you know, making sure to provide value to companies. So what I look for are accelerated graduates or current cohort companies. And I look for 3 different things. I am fairly binary about how I evaluate companies. So I look at 3 different component parts, which basically every VC do. But it's a function of team. So whether the team is the right kind of team, and just playing on that for a second, you have a much higher probability of creating an outlier company in certain regions of the world with certain backgrounds of people, which is a very reactive way of investing, right? But it gives you a sort of an idea where to look and how you could motivate your investment thesis towards limited partners and get their attention. So I try to look for people who've done ventures in the past, what knows fast mean, and who knows what good quality means. So if I see someone who's built a company in the past to like $10 million plus in revenue, then I know that, well, they know how to make business, right? And they have statistically, they have something like 70% chance of higher probability of creating an outlier. Mm-hmm. So it's a good way of de-risking the process. So I look for people who are entrepreneurs who won't stop when it becomes hard, because it becomes hard quite quickly, and then it sucks for 4 years, and then maybe you'll pass the hurdle. But yeah, someone who pushes beyond that. So that would be the first factor. The second one is to see if there's something there. So something in terms of traction. Have they built something out of nothing? Have they, the Peter Thiel thing from 0 to 1? Is there actually something there? Is it more than just PowerPoint? PowerPoints are nice, but it's in the end, if you haven't really taken the risk yourself, why would I risk my money and other people's money on you when you're not willing to do it yourself? So it's trying to just figure out if there's skin in the game, and if there's some kind of traction that indicates that there's a market for what they're building. And then obviously I look at the third component, which is market. Is the market, are they in the right part of an industry, in the right value chain? Is it growing? How fast is it growing? What kind of competition is there? And basically condensing that down to a probability tree, where trying to figure out what's the probability of this company making it from like 0 to the first MVP, from the MVP to like crossing the chasm. Throwing out book names, but that's sorry about that. And then from there to a larger domestic market, and then to an international market. And when you do that weighted probability exercise, then you end up with super small options of you creating a unicorn company. But that's sort of what I weigh into my portfolio strategy, and use as a foundation to see if the multi-weighted average is high enough, basically.
Very interesting, very simplified, but very complex process at the back, both balancing the gut side and the scientific process, which you multi-weighted averages and all. So I think,
everything here is gut based in the end, right? It's my interpretation of someone's story and what they're building. I just, a little bit engineering sickness, but trying to just make sense of what I'm feeling, and then materialize that or convert it into numbers and put probabilities on it. which is basically how the stock market worked in the 80s, right? You made a call, you figured out is the other person on the other end selling you shit or selling you something good. And I think that if we were to fast forward the venture industry 10, 15 years, then we'll see a lot more data-driven kind of decision-making processes. So I'm trying to build that.
I think that's nice. It makes the process more objective as well. Now, I have like two branches here. So I would really like to go and tap the ecosystem side of questioning and kind of see what we can learn from your experience. And then there is the entrepreneurship side.
Sure.
Okay, I'm doing some quick data cut here. Okay, I'll favor the left side and I'll go to the ecosystem. So you have worked in several ecosystems through several accelerators. You talked about your Boston accelerator. You talked about VC Lab as a venture capital accelerator, and others, and in different markets. So we talk about the Nordic ecosystem, or let's say specifically Stockholm's. As you said, it's not a very big ecosystem. So compared to US, what are the similarities and differences that you see here? How would you?
That's a good question. And maybe I could start by describing the US one a little bit more so that people get a reference point. But what I think is interesting is that there's a very clear commercial component to most companies that you see in the US. Because it's embedded in the American DNA, right? You gotta make money to survive. And although there are some companies with a fairly long go-to-market strategies, like extending 6 years and onwards, pharma or infra plays or those kinds of things. Really, where we see the bulk of cases is not there. It's more geared towards commercial kinds of applications, something that you can push out in the market and see if it works. So I think that just comparing that to the Nordic or the Swedish ecosystem, people kind of like the idea of commercializing technology from the universities here more, or at least now seeing that as a big opportunity. And where I think we sort of misinterpret the climate a little bit in Sweden is that most scientists in Sweden are not great entrepreneurs. They're two different people usually, and a fairly small amount of people who are good entrepreneurs are scientists, and vice versa. While in the States, you have a proclivity to make business regardless if you are a scientist or if you are an entrepreneur. And this is just, if you would look at it as a normal distribution, these are the extremes, right? So super small adjustments on the mean would mean that you get a vastly different output in the end. Right? So I think that the differences are very, very small as compared to the larger sort of majority when you compare the ecosystems, but the end results, which is basically the outliers, they vary quite a lot. So that's one difference. The other one is the obvious one is money, right? The check size and the speed is a lot higher and bigger in the States. The ecosystem in themselves are fairly up and out kind of cultures. And so if you don't step up in an accelerator, you're pretty much out. But at the same time, which is a little weird also, is that there's at least in the more well knitted together ecosystems in the US, there's one big component of paying it forward, because you never know when you need to call that person. And I think that you start to see that more in Stockholm. It has been developing for many years. It's not clear when you go to other regions in Sweden that that's actually the case, because you see yourself as a competitor, even though you aren't. So I think that's also a little bit of a difference. And that's also why I believe initiatives like this is important, right? Because it's all about paying it forward. So that would be three things that are different. I haven't really been a part of a non-American accelerator program. All the programs that I've been a part of are American versions on local markets. So I wouldn't know for sure. And this is just my experience, right? It's not a universal truth.
No, but very interesting point that you, the word that caught me initially was the commercial side that you talked about. Of course, the hustle, the commercial side, the push, the sales, those words kind of align more with, I work a lot with early stage entrepreneurs, mostly around 500 to 700 every year. So, and I've seen entrepreneurs on both sides. So I sense and I can feel what you're saying, as opposed to when you come to Nordics, it's a huge part of work over here or engagement in like partial entrepreneurship or social goodness is through a forensics culture that we see over here. So there's a lot of so like paid forward social good work happening here, and probably that's why this region is booming in impact space right now. So North can see how they expanded in the last 5 years. So great points over there. I think market could also be a point. We had in our last week, we had Heja over here, which is a sports platform. And a few months ago, Volumental was here and Fishbrain. And all these players chose US as their prime or key market. So maybe there is something in scaling which makes it maybe difficult to be in a multi-language place like Europe and maybe faster in US. Don't know, the hypothesis.
Well, maybe. I mean, it's a good point. Most companies here, if you want to build a unicorn, then you got to have a born global kind of mindset, which you don't need to have in larger domestic markets. So, yeah, I guess that would make sense too.
Okay, brilliant. So great points on the ecosystem. Now let's turn to the entrepreneur side, because you mentioned this process of team traction and the market size and the scientific size of kind of database decision making. Where do you think entrepreneurs go wrong mostly in your experience? The ones which, okay, let's consider two scenarios or maybe just generalize. Unsuccessful versus successful in terms of venture building or raising funding. Let's call it raising funding. So people who are able to raise swift funding and scale fast, what are they doing right and others are maybe doing wrong?
They're good at building hype.
Okay.
That's basically it. I've seen, you can have companies who really do something fundamentally very, very well in terms of building their product and adhering to a market, and then trying to validate their growth hypothesis or whatever, but they don't get funding at all. But on the other hand, you can have teams who on paper look really, really good. They might not have built anything at all, but they managed to secure like $2 million or $5 million out of thin air without building anything. So the question, if what should you do to attract capital? Well, to me, the answer is you need to be a little secretive and then build your hype. And building hype, I'm not a hype master, so I'm not really good at that. But what I think people do right when they raise a lot of capital is that they have a very short timeline. They're very swift in what they're doing, deliberate in their communication, and they think about the consequences, or what the consequences are when they tell investors no, which makes me more interested. Why didn't you choose to pick my money? Or why are you, not taking my money straight out of my pocket right now? Right? So, a couple of small components of building hype, but yeah, I think that where people get it wrong is that if you are a first-time founder, you haven't really built any companies in the past, you haven't got an awesome track record, then it's quite hard to raise capital, right? Because it's a completely different game. And usually what some people do, all they do is raise capital. So I think that there is a fair balance between raising capital and then working on what you're supposed to be doing with your product, where the scale tips either one or the other way. So maintaining that balance is super important, at least from my perspective. But then, I mean, there are plenty of things that makes an interesting case. There needs to be a real need for what you're solving. If you're trying to make something that only has a social impact component, but no business application at all, or viability, then it's less interesting. It becomes a more of a fundraising kind of project that in the end does something good, perhaps for the community or the local city, but in the end, it's commercially wise, it doesn't really make sense. I'm not sure. What I'm getting at is really, I'm not sure that raising capital is a good measure of success. I'd say that it has more to do if you can actually build what you're promising to build, and if you can get the results that you think you'll get by building it. Then capital is secondary, right? If you know that this is a problem and that people will want to have it and buy it, then why not, just do that without taking money if you can. If you really need the money, then go for it. But get as far as you can without taking anyone's money. You could probably take friends and family rounds, but it becomes another game when you take money from VCs. And it's not pleasant, right?
Got it.
So like an actual example to just make it a little bit more concrete. We have a company that we basically fund ourselves. So we put in perhaps 500K euros to just build up the platform, make sure that the technology works. We have proof of concepts. We have MVPs in place. We see that we get actual results from doing this. And now we're at a place where we say that if we bring in money, it's to accelerate our go-to-market. It's a lot easier to sell that than sell. We might build an AI that does X, Y, Z, and it might have this result, right? Because then it becomes a credibility problem rather than an actual can we build a problem, or is it built? So yeah, I'm just rambling here.
No, but this is very good. This is really good advice on several levels. I'll try to loop in my notes over here. So you said build hype, and you made a very interesting point up to a level where you can start saying no to investors, because that puts you in a control situation. So if you can build that level of hype, so again, a message here. A very clear learning point, you said fortune favors the second time founder. So if you have track record to show, at least somebody in the team has track record to show, another maybe a SME, subject matter experts, maybe that. You made a very interesting point on build something in stealth mode or secretive. We'll come back to that, so I'm marking that with an asterisk. Again, a very, very crucial point for Nordic founders out here. So you might be passionate about making social impact, but there might not be a working business model in what you're trying to build. So consider that. Are you trying to build, as Simon said, you want to build a fundraising project, which can be done in foreign space through EU funding, through local commune funding, or are you really trying to build a startup in commercial space? So I think that's a good branching point you mentioned. That's where and you made a very interesting point, like accelerate, if you're raising money for building versus marketing or accelerating the go-to-market. So where you think is, so we can go maybe a bit deeper into that point, because many early stage startups, they're putting together pitch decks so sometimes pure pitch decks, sometimes with some sketches and saying we need money to build this. So that's a build side investment they're asking, as opposed to those who have validated some sort of a prototype or have an MVP and want to extend that capability of development. But then that takes a different, so what would be your general advice? Should startups not work on the pitch deck or the early sketching side and not raise money there and just focus on the later?
Depends on which situation you are in, right? And also, I think to just make it a little bit more, or add some complexity to whether or not to raise funds, you have different stages, right? So if you are in pre-seed stage, you haven't built anything, you're trying to figure out how to get some money to actually start doing what you want to do full time, then it's a credibility and problem, right? What I look for there is, is this team, does it have an insight that no one else has into this market that really makes it stand out? Because what I'm looking at is I'm trying to figure out which of these projects can make me 100x on my investment. Which basically means that if you try to value your company at 10 million kroners, 100x from there, that's a billion kroner. it's a lot of money. Can you actually build up the valuation for a company like you're building to that levels or not? That's in the end. And in pre-seed, it's all about people, right? So if for instance, what we do with Greens is that we look for people who has that kind of experience and has niche knowledge into areas that no one else has knowledge or insights. So really the secret sauce to it. If you move up a stage to a seed level kind of company, then it becomes more about whether you build something and put it into market and see what the sort of results is. So it's the question you should answer or ask yourself when you are in seed is, did I actually manage to build something? Did I manage to build a prototype? Could I get it into market and just get some first feedback into it? And then moving up from seed, the sort of game to A rounds is to find the product market fit, making sure that there actually is a big addressable market that wants what you're building. So the focus on as for you as an entrepreneur, what to do in different stages, it really varies depending on where you are. So in the beginning, it's about having the right kind of team, but when you move upwards, it's about actually building something that works, and then making sure that people actually want to buy it or use it. So I'd say that just to add some complexity to it, that segment the scene a little bit. Back to your other question, right? What is still just rambling on here, but I guess that's fine. What to do about it is really to make sure that you focus on the appropriate steps for where you're at. That's sort of the synthesis of the argument and the recommendation, and making sure that you don't spend time fundraising or building out a super advanced pitch deck for something that you don't know if it will work or not. In a pitch deck, you could build a pitch deck in a couple of hours, as long as you know what you're doing. I'm looking for experts. I'm not looking for generalists. So in the end, don't send me something generic. Spend some time thinking about what you're actually saying. I don't, some people say that they care about the design and the outlook of the presentation. I don't really bother to consider that as much. It's more about what the pitch deck actually tells me. Is it the right people? Is it the right project? Is it the right kind of product? Is it the right market? Do you have traction? And then, when this becomes hard, it's really when you add, more obscure parts of the ecosystem, like Web3 projects, right?
Got it.
Then things becomes really hard, because it's not really about finding an opportunity that does 100x over 10 years. It's about finding something that does 10x over the next 2 years, and then just replicating it. So keep in mind, if you do Web3 projects, the investors in that space has other kinds of timelines for their investments and other kinds of expectations on you as a company. Not really sure that it's beneficial for you as a founder to bring in venture cap that early, especially if investors tend to offload secondaries or digital secondaries into the public markets quite quickly to get their money back. And the ballpark and the game is a little bit differently set up. So let's just stick to the things that I know best, and that's probably deep tech. So
okay,
from that perspective, it's more about making sure you get something out and make something work.
But deep tech is really your point on deep tech. So we had Per Hedberg about a year ago over on Startup Grind, and he basically, the biggest problem he quoted for the Nordic ecosystem was that we are not strong enough on deep tech funding. So,
No, that's true. Because it's hard to fund it, right? And it's if you look at the problem where I'm sitting at, right? The problem is really that it's hard to attract capital, larger kind of limited partner capital into venture funds to then distribute the funds into the right kind of projects, because that money that I'm trying to attract comes with a lot of strings attached. And in the Nordics and in Europe in general, the usual suspect limited partners are bigger institutional governmental funds. So like the European Investment Fund, some invest in Sweden. So it's by taking money from players like that, it also comes with certain responsibilities to adhere to what you can invest into and what you can't invest into. Same goes if you go for private capital, then you have another kind of priority, right? It's about returning the fund as opposed to taking money from the IIF. It's more about finding the right kind of underserved segment in the local market. So the priorities varies depending on which fund you are talking to as a founder. And I think that it's a fair point to say that it's underserved in Sweden. And really, it's, you could look at it from two ways. Either that there aren't enough interesting projects ongoing here in the deep tech space, or that it's a visibility problem or a marketing problem. It's hard to tell people or outside investors that this is actually really happening. And I would probably argue more for the latter than the first, because we've seen, just in recent years, we've seen Heart Aerospace, we've seen Enride, we've seen a lot of these companies coming up and sort of challenging the norm for what would deep tech actually be. And I think that deep tech is also a little bit, it's a thing you say, and there's 1,000 subsegments to deep tech.
Yeah, exactly.
I only do 3, and people might argue that those 3 aren't even deep tech. So I mean, yeah, that's probably fair. I do commercial deep tech, or more, technology that actually can be commercialized and not take 10 years to be commercialized. Something that would work now. And in terms of AI, it has a lot to do with applications on GPT-3, and even so, DALL-E. So those kinds of algorithms or base models.
Okay.
So there's definitely different parts of deep tech. I don't really do infrastructural deep tech like Svenska kraftnät, for instance, for the energy sector, right? I don't do those kinds of investments because it's a completely different field. So it really depends on the person on the other side of things.
Great points there, Simon. I'll just rewind my notes a little bit here and kind of bring us some summary to our founders out here. So Simon, a few minutes back, Simon made a very interesting point of breaking down that question of raising funding into the stages. And the stages, if you are at the pre-seed stage, Simon talked about people, credibility, and the problem. So I think if most of you are working on the early stage, that's where the focus needs to be. But then you brought in something very interesting, which could be a kind of a marker when you're developing your pitch decks and taking them to investors, which was 100x. So if you're building something and if you're building a startup, it needs to be that level of jump, that level of quantum leap that needs from your problem definitions, research out to a validated business that's actually working in the market. Does that make that kind of money for your backers? If that does, and yeah.
I can just add to that. Like my base level of investments, I don't enter into anything when I've weighted all the risks. If the multiple weighted average is not over 12x, and given the timeline that I have, then it's a no, right? And that's just sort of the basis point to get a foot in the door. But what I really look for is companies that can build within like 6 years, perhaps 6 to sometimes 10 years. Build something of value where you can do revenues up to $100 million, because that's basically $1 billion company, right? So that's the play.
But you also mentioned that in the emerging technologies, Web3 and other areas, maybe the expectations are not that big. And because the timelines are not very well defined yet on how fast these technologies can actually have an impact, move, and scale. So that's where you said even a 10x over 2-3 years horizon is and okay to get your foot in the door.
Well, yeah. And Web3 is a subject in its own, because it's what most bigger funds invest into are infrastructural plays within Web3 which is, as of right now, DeFi is super hot, gaming is super hot. So any project that sort of works towards the layering problematics is interesting. And you'd see Chris Dixon and A16 said in Prodigy, those bigger kind of funds that invest into these technologies. They for one, they purchase some equity, but then they purchase the options of purchasing coins. And coins or other kinds of digital assets, basically. And what happens is that usually when you set your own tokenomics models for let's say you're issuing coins, you could set the value of those coins arbitrarily. So it could be $10 million, or it can be $10 billion, or it can be like $100 billion. No one really knows until you hit the market. And so where I think this sort of industry is a little weird and where it doesn't really add up for me is usually what these kind of projects do is that they raise capital, they issue coins, and then they get an investor who's already backed them to purchase a lot of coins, and then go out and say that this is now the value of the coins. And so basically they created assets worth millions and millions of dollars very, very quickly. And then they offload them to private markets. And then that sort of cements the price and the value of the coins. And they make a lot of money. And it's unregulated. So it's, it's another kind of game that you're playing when you do those kinds of projects. That's the only key takeaway from that.
Okay, a great point over there. I have a couple of audience questions coming in as well, and one question which is linked to my initial notes. If we talk about, and then we take the audience questions. How low do you go in XY Ventures? Like how early do you go in XY Ventures?
In terms of stage, I look at anything and everything. I look at super early stuff as a way to peg founders for future investments. And really what I do with, and together with Dan, is that we invest in pre-seed stuff, and we try to serve that part of the market as well. For XY, I do a version of it, but most of the deal flow from XY comes from the accelerators in the States. So they are usually more aligned with like late pre-seed or just in time to do a seed round.
Okay.
So it's, say my average ticket size for an SPV would be like 750K euros, dollars.
Okay. But it's generally or mostly or primarily seed graduate accelerator graduates, alumni, or companies which are already part of accelerators, because that provides a validated base. Clive talked about raising money for scaling. Scaling require deep pockets, otherwise it's best not to value, just take the long road. So that's
I guess that's a common, right? You need deep pockets. If you're doing deep tech and you're trying to scale, then yes, you need a lot of money.
Exactly. Simon, you mentioned the variables that determine a good investment: team, traction, market, industry. Changing gears, what makes a good VC in your opinion, and how might the startup VC fit count? Yeah,
I think that's a really good question, because it's something that I try to stress to founders that pick the right kind of VC, not the money, and the VCs that are the usual suspects when you're trying to raise capital. The best VCs in mind are usually like Sequoia, Excel, Index Ventures, the bigger ones. A16 said. But the problem is that if you take money from large funds, even if you could take money from them, the problem is that if you do not succeed within a year, then you won't get any more money. And so that's basically killed your case, right? They rarely invest in anything under seed. And even when they do seed, the seed rounds are, crazy expensive. Yeah, they're crazy. So usually what we advise, this is coming quite a lot from Dan as well, pre-seed founders and seed founders is to make sure to find the right kind of VC depending on the stage that you're in and the market that you're in. So if you, let's say you're in manufacturing, into manufacturing, and you're doing a pre-seed company, I'd take money from local players that knows the industries that could open up doors for more sales opportunities, to see if I can build up to a place where I can show some traction and get my product into market and leverage test beds and whatnot. If I were in seed, I'd pick a little bit of a bigger VC, mostly regional or Nordics or Northern Europe, to see if I can scale my position from the domestic market to Northern Europe. So basically just try to pick VCs after your stage to not get to a point where you risk killing your case unless you are unsuccessful, or if the timeline becomes a little longer than you thought. So yeah, it's a very important question, and I think that you should be careful of who you pick, so you don't just take money and run with it, but rather ask them what's your actual value add here, right?
Got it.
Why do you think this is important? How would this complement? How would my company complement your portfolio? And if the answer isn't clear, then I'd say no.
Okay, I think that's a very clear answer.
That also, that builds on one premise, or a very important premise, and that's that I don't need the money. I can't argue like that unless if I really need the money, then I can't do that line of argument. So it's important to make sure you actually have a value in the company. You could probably run it, but the thing is that if you want to scale and do it quickly, then money would help.
Got it. What do we have more? Scott has I think it's a comment. You're really building two products here, one for the market and other for the investor. They're not always often compatible. Okay.
No.
Okay. Benjamin has a question. Let's see. As someone who invests in deep tech, can you talk a little bit about at what technical level the pitch ought to be? The pitch ought to be, yeah.
So for pre-seed stage, the level of detail, what you basically want to convey with the pitch deck is that you get the problem. It's not a generic problem, although a problem can be big market-wise. What I'm really looking for is the breakdown of the problem. Where is this important? Why does it exist in a portion of the value chain and not another one? How does it work today? Why do you have an edge into these kinds of clients? Why would they listen to you over someone else? So really, when it's early, it's more about the founders, right? As in the beginning. When it comes to seed stage, I'm trying to evaluate your actual MVP and your product. And so then it becomes more about the traction of the product. And obviously, in that stage, most VCs, they do a technical due diligence as well. So if when we open up the hood and we see that there's, it's someone running a bike instead of actually having a big engine, then well, that's a buzzkill. So don't do that. Make sure that there's actually something there and you've tried it, and be transparent with what you have built, because in the end that will come back to you if you try to skew the metrics or lie. So just be straight up with what you've built and how it works.
Got it. We have, I think, last question here, and then we'll post some links for the next topics. What are the pros and cons of establishing a Delaware corp and raising capital from international investors instead of Sweden? This is a common practice among Israeli and Ukrainian startups.
So the tax laws and the corporate laws in Delaware is nice. Sweden, it's not as nice. Short answer. But if you're considering setting up a company and you're considering different jurisdiction for it, really what the question is where would I do most business? Is it in the States or is it here? Right? Setting up companies in Sweden is fairly simple, although we have high taxes and other kinds of benefits as an employee. it really comes down to where you want to do business, and if there's a reason for you setting up your company in Delaware. So for instance, the only reason why I have a Delaware company is because, well, we do some investments in the US. Otherwise, we wouldn't have it. So really, it's a question about doing businesses. Yeah, talk to a lawyer if you want a good opinion and a sort of real legal breakdown, because I wouldn't be the right kind of person to talk to.
Got it. Simon, thank you so much. We have reached the end of we actually are 3 minutes over. So a big thank you for Startup Grind from our community here, from the team here, that you could make it to today's event. And thank you all who have been listening in, joining in this talk. Big thank you to you. We'll post some links. Sukul has already posted, so that's my LinkedIn link. If you want to be involved in Startup Grind, in managing the Discord versus Slack community, or any of the roles like physical events and communities, all that, just drop me a message on LinkedIn. Simon, what's the best way to get in touch with you or X5 Ventures? If
so right now it's a little hard because there's so much on the table. It's like everyone, you got to do everything before the summertime, but in about 1.5 weeks, it will be a lot easier to get a hold of me. And the best way is either through LinkedIn or through a text message or through a phone call. Kind of like phone calls overall, because it's nicer to talk to people than to write to them. So
perfect. But LinkedIn is pretty much open to everyone. Sukul, if you could paste Simon's LinkedIn link over here, that'd be great.
You can paste my email as well. I mean, emails are fine.
Okay, so
it's
maybe
a little
you
bit
can
of a
type it
backlog
in
right
the
now.
text in the chat directly.
Yeah. Simon.
And Scott, thank you for being here. Thank you, Farid, Feng, Jens, Jon, Jonas, Kelvin. Thank you all for being here. We'll close the chat now and the discussion as well. But do drop me a message. We need to finalize our Startup Grind team in the next 2 weeks. Before I take the rail break, I'll be in London for 1 month. So let's see how that goes.
Sweet.
Thank you so much, Simon. Have a very, very good day. And everyone, have a nice weekend.
See ya.
Take good care of yourselves. Bye-bye.